Hi guys, it's Stock Curry and welcome to the insanity that is the stock market. Over the past few days, the stock market sold off, then after hours, the stock market skyrocketed upward. I'm going to explain what's going on, so let's get into it. Let's start with this huge after-hour spike on Wednesday that sent the Nasdaq up over 1%. It all happened because of one single company. Nvidia shares spiked on huge forecast beat driven by AI chip demand. Nvidia reported a $1.09 earnings per share versus 92 cents expected, and revenue came in at $7.19 billion versus $6.52 billion expected. Nvidia is up 150% year to date. In the last 5 months alone, Nvidia is up 150%, and it's up 240% from the October lows. A 150% move in 5 months, a 240% move in 8 months. This is the most impressive rally I've seen on any stock, pretty much, I think, since Tesla ran up in around 2020. This is unbelievable how much Nvidia has run up. And I want to be a little bit fair here, because as bullish as everything seems right now, we have to stay a little bit grounded in reality, because I did see some Nvidia bulls sell their stock after the move up. They sold around $400 per share. And some of those Nvidia bulls called this move insane, unhinged, and people are thinking this is perhaps a little bit too much of a rally. So I want to go back to the earnings real fast and just point out one thing that kind of shows why maybe Nvidia should not be at an all-time high right now. Up for sure, but maybe not at an all-time high. As good as Nvidia earnings were, it was not the best earnings in the company's history. Nvidia's overall sales actually fell 13% on a year-over-year basis. So even though Nvidia did report a massive earnings beat and they had excellent forward guidance, it's important to understand that Nvidia's sales are still down year-over-year. And the company is nowhere close to a record earnings. They've had many quarters that the earnings were better than the earnings this quarter. And the main reason that Nvidia skyrocketed after hours was, I don't think it was so much the earnings beat, because like I said, this wasn't their best quarter ever, not even close. I think the reason Nvidia hit all-time highs was over more hype around AI and a belief that Nvidia's sales are just going to skyrocket to the moon over the next few years as AI becomes a bigger and bigger player, and Nvidia is a very large player in that. And while Nvidia absolutely should be rising over the AI hype because they are the biggest player and their sales absolutely are rising because of that, I don't personally think AI should be up as much as it is. I think it's significantly overdone, and I think the run-up is just too much too fast. I do think Nvidia is due for some kind of pullback. I do believe it's up, but look, this was nowhere near their best quarter ever, and I don't think they should be at all-time highs. Now, their current PE ratio is around 170, and I don't know what their forward PE ratio is going to be. It's going to depend upon how analysts predict future Nvidia earnings. But my guess is it's probably going to be somewhere between 60 and 70. And that is just, Nvidia's not growing fast enough for their PE to be between 60 and 70. They're just not. And so I am not convinced that Nvidia has actually earned the current shock price. I think the stock price is, did I just say shock price? It is shocking. It's amazing. Nvidia $400 all-time highs. I never would have believed it. All I'm saying is I don't think they've actually earned it with this particular earnings. Very good earnings. Definitely should have gone up, but not 30%. By the way, as of the recording of this video, Nvidia was up 28% at $391. Unbelievable. And as I mentioned in a prior video earlier this week, Nvidia has a very large weighting in the NASDAQ and the S&P. And with Nvidia alone up 28% after hours, that obviously sent the NASDAQ and the S&P up after hours as well. As of the recording of this video, the NASDAQ was up 1.75% after hours. It is unbelievable that one single stock can send the NASDAQ up 2%. One stock sent the NASDAQ up 2% after hours. That is insane. And it just reiterates what I was saying in a prior video about how just because you see the markets running up does not mean that the stock market overall is running up. It just means that the 5 biggest weightings are running up. And I think that's perfectly shown how when one stock ran up, it brings the entire NASDAQ up 2%. And you think all stocks are rising, they're not. As I mentioned, 60% of stocks are still below their 200-day moving averages. So what's going on? We saw that prior to Nvidia's rally. We saw that on Tuesday and Wednesday with the stock market selling off. So we've talked about what caused the stock market to rally on Thursday. Now let's talk about what pushed it down on Tuesday and Wednesday and what's keeping most stocks down, even though a few are rising. Well, the reason that the stock market fell on Tuesday and Wednesday has to do with the debt selling, but there is another thing going on as well, and that is the Federal Reserve. And the Fed meeting minutes from May came out, and Fed officials are a bit divided over whether to raise rates again in June or to pause. The minutes showed that several participants noted that if the economy evolved along the lines of their current outlooks, then further policy firming after this meeting may not be necessary. In other words, several participants felt like a pause would be the right thing to do in June. Other participants believed that additional policy firming, that is more rate hikes, would be warranted at future meetings because they expected progress returning inflation to 2% could continue to be unacceptably slow. So the meeting minutes showed that at the May meeting, some Fed officials felt like the right thing to do would be to pause in June, and some Fed officials felt like the right thing to do would be to raise rates in June. And over the past 2 weeks, a few Fed officials have said that inflation and economic activity are not slowing enough to justify an end to the interest rate increases. But others, including Fed Chair Jerome Powell, have hinted that they might prefer skipping a rate rise to assess the effects of their past increases and the banking sector strains. So the thought here is they wouldn't necessarily pause, but rather they would skip a rate rise, not do one in June, and instead raise interest rates again at the next meeting. Most notably, Fed officials dropped language from their post-meeting statement this month that suggested further rate rises would not be necessary. So Fed officials are opening the door to another rate rise in June, and that appeared to be very hawkish. Another thing that sent the markets down on Wednesday was the fact that the Fed minutes showed that the Fed staff continued to expect a recession would begin around the fourth quarter of this year as the lagged effects of rate increases and banking strains slowed economic activity. That would put a recession starting in around October of this year, and that would seem to line up with a lot of the economic data that we've been getting over the past few months. So how do the Fed futures now predict the Fed is going to do in June? Raise rates or pause? Well, while Fed futures are still largely in the boat of a pause, the chances of the Fed raising rates are increasing. A month ago, the chance was at 24% that the Fed was raise rates. Yesterday, it was at 28%, and today it jumped to 33% chance of the Fed raising rates again in June. So the chance that the Fed might raise rates in June instead of pause is certainly one thing that's pushing the stock market down. But the bigger thing that's pushing the stock market down are the ongoing debt limit negotiations, or perhaps lack thereof. Debt ceiling talks hit a snag over spending levels, with only 8 days left until the default deadline. As it stands right now, Democrats refuse to budge. They're only offering to raise taxes in order to get the balanced budget, and they are not offering to do any spending cuts whatsoever. Republicans are in the exact opposite boat. They're not willing to do any tax raises, and they're only willing to cut spending in order to get a more balanced budget and also raise the debt limit. And with Democrats and Republicans on completely opposite sides of the aisle here and completely unwilling to negotiate, unfortunately, there just isn't any progress being made with the debt limit talks. And McCarthy spoke today, and while he refused to give in to Democrats' demands, and Democrats refused to give in to Republicans' demands, the one thing that McCarthy did say is that the United States would not default. He said there was no circumstances whatsoever where the U.S. would default. The absolute truth is the United States will not default. And to be honest, I believe him. The question is, how close are we going to get to the deadline before coming up with an agreement? Now, in doing some math here, McCarthy did say that he wanted to give Congress 72 hours to review any sort of agreement before signing it and passing it on to the Senate. And if those 72 hours are given, that's 3 days. Well, June 1st hits on a Wednesday, which means any agreement would have to be done by Sunday. So there's a good chance, if McCarthy does hold up to his word, that an agreement between Democrats and Republicans will occur on Sunday, which, if that does happen, might send the stock market rallying on Monday and then further again on Wednesday once all the bills and everything are signed. So just based upon that, I'm seriously considering a 1-week call option to open up on Friday, in just expectations of this getting resolved in time and no ill effects or anything. Still, there's always that possibility that the Fed might default. And Janet Yellen warned that it's almost certain that the U.S. would miss payments in early June, essentially saying that Republicans and Democrats have got to raise the debt limit by the end of next week at the absolute latest. They have until the end of next week to raise this debt limit, or else the U.S. will default. The stock market could fall 35% over the next month. Fitch just put the United States on negative credit watch, meaning Fitch is looking to downgrade the U.S. credit rating. The last time this happened was 2011, and in 2011, the stock market fell 35% in 1 month. So watch out for a possible massive drop in the stock market if the U.S. credit rating gets downgraded. And in other news, the banking crisis continues to be a worry over commercial real estate, as Uber is now set to offload a third of their San Francisco office space. And the Los Angeles office vacancy rate spikes amid commercial real estate market struggles. All of this is causing the value of commercial real estate to drop in a very similar manner to the way that residential real estate dropped in value back in 2008. And over this year and next, most of that commercial real estate is due to renew. In other words, when you get a commercial mortgage, you don't just hold it for 30 years and then pay it off. It balloons every 10 years or so. And right now, a lot of commercial real estate is ballooning, meaning it has to get refinanced. And that commercial real estate is not going to get refinanced at 3% APR. It's more likely to get refinanced at around 8% APR. And that's just going to make the real estate unaffordable. And the concern here is that there's going to be a lot of defaults, a lot of real estate going into foreclosure. And if that happens, it's going to put significant downward pressure on the banks. And it is expected to happen later this year, which is actually the main reason why the Federal Reserve is currently predicting a recession to start later this year, is because of the commercial real estate crisis, which should also continue to send bank stocks falling further downward. And this is the biggest economic worry that we have right now. And as all of this goes on, we're trading, we're making money. I don't care if the market's up or down. We're going to make money either way. If you want to learn how to trade options and how to make money no matter which way the market goes, up or down, I have some really great news for you. The monthly VIP memberships are open once again. They've been full for 6 months, but they are open once again. If you want to get into the VIP Discord with the We Profit Day and Night coaching program, it's all combined into one thing now. If you want to get into that and get access to all of the private trade alerts and learn how to trade options, how to read charts, how to do technical analysis, how to do multi-leg options, and soon we'll even be adding futures to the program as well. If you want to learn all of that, you can now get in at the monthly rate, but keep in mind that I only have a few slots open at the monthly membership. So if you want to take advantage of that, you want to get back in and pay monthly instead of annual or lifetime, now is your opportunity before slots fill up. You can schedule a call with my onboarding specialist who can give you more information on the program and the costs and all that at weprofitdayandnight.com. That's weprofitdayandnight.com. If you got a lot out of this video, then be a good friend and share this video with your friends and family so they will know what's going on as well. Don't forget to hit the like button and subscribe. And for those of you who stuck around to the end, I wanted to let you know that I am leaving to go storm chasing. So my videos are going to be very off and on, very short for here on out. I'm not really going to be looking at the markets too much over the next week. Also, don't forget that Monday, the markets are closed for a US holiday. So plan your options trades accordingly. And if you missed the last video I uploaded where I explained kind of what's going on with the market and why it's not really rallying, even though it appears like it is, make sure you watch the last video that I uploaded here.